All right, welcome back to Yahoo Finance Live on this Thursday morning. Well, between the two meme booms, we had the SPAC boom happening, I guess kind of in the background, kind of in the middle. And the star of that show, Brian Sozzi with Chamath Palihapitiya with his several, I think he had 5 different social capital SPAC vehicles that ended up acquiring a business and then taking that business public. And now it sounds like Chamath has another target on his mind.
Yeah, he lost track of what Chamath was investing in or not investing. But according to regulatory filings, he is getting back in the SPAC game. He never left, perhaps, but he's getting back in here in a bigger way. $800 million he has set aside for 4 potential new biotech SPACs. Yes, biotech SPACs. And that comes as the biotech ETF space has really been hit about 10% so far on the year. Really, I think, lured in there with this broader tech stock sell-off. Nonetheless, biotechs have been under pressure. Chamath in here potentially smelling an opportunity. 2 differences, though, with these SPACs compared to some of his other SPACs. And Chamath, as you can see in there, is known as the SPAC king on Wall Street. I hate those names. Nonetheless, that's what folks call him. 2 differences. First up, he's using Morgan Stanley to advise him on these new SPACs instead of former advisor Credit Suisse. And number 2, no free warrants. He has been a big user of these free warrants in his SPACs in the past, but he's not going to use them now, likely because they've come under fire, because eventually, if they are cashed in, they could dilute shareholders. So definitely not a good look there. Also not a good look. The SPAC space overall, I mean, guys, it really has cooled down so far in the second quarter compared to earlier in the year. You have 32 SPACs listed publicly in April and May. You had 298 listed in the first quarter. So the pace has really slowed down. Also, the SPAC ETF that I follow quite closely, down about 13% from February 16th record high, according to Yahoo Finance Plus data. Now, we did have one successful SPAC this week. That was SoFi, the social capital finance company. They're also trading crypto and stocks. Here's what SoFi CEO Anthony Noto told me on why he went the SPAC route despite the pressure in the space.
The vehicle for us was a unique way for us to raise private capital at a certain valuation and have certainty of that deal closing, in addition to going public and having it all in one packaged product. We had a unique circumstance in that we had a significant amount of our capitalization that was preferred stock, and our regular IPO wasn't the easiest and most cost-efficient way to convert that preferred into common, which was necessary for us to apply for a bank license and to be able to go public. And so a private round from T. Rowe Price, followed by a PIPE round, and then in conjunction announced with a SPAC, was really the 3-legged stool that we chose to access the public markets.
So why I think you saw SoFi's SPAC embraced by the markets. 1, the company has made money for the past 3 quarters. And number 2, clearly his thought, Noto, the CEO, has thought this out. And then last but not least, perhaps their board is quite credible. Overall, my take is this. It's very simple. And I'll just hit the first one here, first bullet point. Ignore their existence. Ignore SPACs. There's a lot of other opportunities in the market. If meme stocks aren't your thing, go find something else.
Yeah, look, I think the thing with SPACs and the thing we kind of see with everything else, Sozzi, in this market is that the SPAC is a great structure and it can work really, really well for the right opportunity. And SoFi, pretty mature business, and the SPAC did better after the wrapper. I think it was IPOE before it became SoFi, and it had been up more than it is now. But again, it's a mature business. People have a pretty good idea what SoFi does. It's been around for a long time. Anthony Noto is a total pro running that company. So that's all fine. But the way it started to get packaged as an asset class unto itself, that there's something intrinsic about being a SPAC company that has value. That obviously is not true. It's just a financial wrapper, as Noto just said in that clip that we just played. And so you talk about the SPAC ETFs and some of these other strategies around packaging it. I mean, there's nothing unique about the companies other than how they came to market, which long term doesn't really mean anything for the business. And so I think that like all innovations that people get too excited about, or trends that turn into fads and manias, SPACs have their place and they're going to have their place. You mentioned how many hundreds of targets or how many SPAC vehicles have come to market. There's probably not enough companies out there to go public via these things. So most of these SPACs are going to end up returning money to shareholders and, they'll go on their merry way. And the math started to get really difficult on how many companies you could bring to market. But again, said it a million times, SPAC is a great wrapper, a great vehicle for the right business. It's just not for 400 businesses all at the same time, the way that happened earlier this year. And I think that's pretty obvious how we're going to see the space rationalize. But always interesting to follow innovation here in financial markets, and we'll see if Chamath can keep his hot streak going, because he's been on fire here. The exception in Clover Health might be the one that's underperforming here of late, but obviously Virgin Galactic, SoFi, among some others, have been good performers.